Welcome to Headphone News, International Edition for Saturday, December 7, 2024.
Taiwan calls for China to reduce military aggression. Taiwan's President Lai Ching-te is urging China to reduce its military aggression and stop the drills around Taiwan. This call comes as Lai tours Pacific nations like Hawaii, Guam, and Palau to strengthen diplomatic ties. China, claiming Taiwan as its territory, is expected to respond with military exercises following Lai's international engagements. These ongoing tensions highlight the complicated relationship between Taiwan and China, with Taiwan asserting its right to engage on the global stage. This situation raises concerns about regional security and the possibility of conflict, impacting not just Taiwan but also international relations in East Asia. Understanding these dynamics is crucial, as they could influence trade, investment, and military strategies in the region.
David Perdue appointed U.S. ambassador to China. David Perdue, a former senator from Georgia, has been named the U.S. ambassador to China by President-elect Donald Trump. This move aims to improve the long-standing difficult relationship between the two nations. With over 40 years of international business experience, Perdue has worked extensively in Asia, including in Singapore and Hong Kong. He will focus on building stronger diplomatic ties and addressing trade conflicts. Perdue served as a U.S. Senator from 2015 to 2021 and previously ran for governor and Senate but was not successful. The relationship between the U.S. and China is crucial, as it affects global trade and international policies. Recent talks between U.S. President Joe Biden and Chinese President Xi Jinping show a shared interest in cooperation, despite ongoing challenges. Perdue's appointment could have a significant impact on future trade agreements and tariffs, influencing businesses and consumers in both countries.
Currency markets react to political events. Currency markets are experiencing significant changes due to recent political events in France and South Korea. The South Korean won has dropped by 0.43% against the US dollar, with an exchange rate of about 1,420 won, which is roughly 70 cents. South Korean President Yoon Suk-yeol enacted and then quickly lifted martial law, creating uncertainty in the financial markets. In France, President Emmanuel Macron is facing a government collapse, which has further affected the euro, causing it to fall to about $1.06. Investors are closely watching for the upcoming U.S. jobs report, expecting around 200,000 new jobs after a disappointing increase of just 12,000 in October. The Federal Reserve is likely to consider this report when deciding on potential interest rate cuts. Bitcoin, the leading cryptocurrency, briefly surpassed $100,000 before settling at around $97,911. The political instability in these regions raises concerns about economic stability and may lead to further changes in currency values, impacting global trade and investment.
Xinjiang Cotton Association's appeal to brands. The Xinjiang Cotton Association in China has urged international brands to resume sourcing cotton from Xinjiang. This request comes after Tadashi Yanai, the CEO of Fast Retailing, which owns Uniqlo, stated that the company does not use cotton from this region. The association highlighted the importance of supporting the local cotton industry, which is vital for China's textile sector. Xinjiang produces most of China's cotton, making it essential for global supply chains. Allegations of human rights violations against the Uyghur population have raised serious concerns for companies sourcing from Xinjiang. Recent actions by governments and consumer advocacy groups have increased pressure on brands to reconsider their sourcing practices. These developments could significantly impact brand reputation, consumer purchasing choices, and trade between countries. Uniqlo's position may affect its sales as consumers become more aware of ethical sourcing issues. This situation underscores the complex relationship between business practices and human rights concerns in global markets.
David Sacks appointed as AI and crypto czar. David Sacks, a prominent venture capitalist and entrepreneur, is taking on a significant role as the White House AI and crypto czar under President-elect Donald Trump. This announcement was made on December 6, 2024. Sachs will oversee policies related to artificial intelligence and cryptocurrency, with the goal of creating a clear regulatory structure for the crypto industry. His appointment reflects Trump's support for influential figures from Silicon Valley. Sachs previously hosted a high-profile fundraiser where tickets were priced at $50,000, and a premium option cost $300,000, which included benefits like a photo with Trump. He is well known for selling Yammer to Microsoft for $1.2 billion in 2012. In his role as AI and crypto czar, Sachs could significantly influence future technology policies, potentially creating a more favorable environment for cryptocurrency entrepreneurs. This shift may positively impact the cryptocurrency market, encouraging innovation and investment. With his strong background in technology and finance, Sachs is well positioned to drive important policies in these rapidly evolving sectors.
Russia's commitment to BRICS payment system. A senior Russian official has stated that work on the BRICS payment system will continue, despite warnings from U.S. President-elect Donald Trump about enforcing 100% import taxes on countries that undermine the U.S. dollar. The BRICS group, which includes Brazil, Russia, India, China, and South Africa, aims to collaborate on economic issues while reducing dependence on the dollar. Trump's recent comments indicate his desire to maintain the dollar's dominance in global trade. The BRICS payment system is intended to facilitate trade among member countries without relying on the dollar. This move could lead to significant changes in international trade and currency values, highlighting the rising tensions between the U.S. and emerging economies.
World Bank announces $100 billion for poorest nations. The World Bank has announced a historic $100 billion to support the poorest nations. This funding will be distributed over 3 years to help countries facing serious challenges like debt, climate change, and inflation. The pledging conference took place in Seoul, South Korea, where donor countries made significant commitments. Norway pledged over 5 billion Norwegian krone, which is about 455 million United States dollars. South Korea increased its contribution to 846 billion South Korean won, roughly 597 million United States dollars. Britain committed 1.8 billion British pounds, around 2.25 billion United States dollars, while Spain pledged 400 million euros, about 423 million United States dollars. The United States, led by President Joe Biden, pledged 4 billion United States dollars, an increase from a previous commitment of 3.5 billion United States dollars. This funding is vital for the International Development Association, which provides grants and low-interest loans to low-income countries. The total amount pledged exceeds the previous figure of 93 billion United States dollars announced in December 2021, but it still falls short of the 120 billion United States dollars target set by some developing nations. This funding aims to improve living conditions and support sustainable development in at-risk regions, fostering global stability and cooperation.
Economic pressures on the European Central Bank. The European Central Bank, or ECB, is likely to cut interest rates again as inflation, or rising prices, falls and financial challenges increase. Recently, former U.S. President Donald Trump suggested a 10% tax on imports, which raises concerns about its effects on trade in Europe. The economies of France and Germany are facing difficulties, prompting discussions about potential rate cuts. Experts expect a reduction of 0.25%, which would be the fourth cut this year. Christine Lagarde, the ECB's chief, warns that a trade war could harm all countries involved. Current predictions indicate a 0.5% decline in the Eurozone economy due to these tariffs. The euro is currently valued at about $1.06, meaning that 10,000 euros equals roughly $10,600. The situation remains uncertain, with market expectations leaning towards further easing of monetary policy as economic conditions evolve.
Decline in German industrial output signals economic challenges. German industrial production experienced a surprising drop of 1% in October 2024. This decline was mainly due to significant decreases in energy production in the automotive sector. Analysts had anticipated a rise of 1.2%, following a revised drop of 2% in September and an increase of 2.6% in August. Energy production fell sharply by nearly 9%, while automotive output decreased by almost 2%. This overall decline highlights ongoing economic difficulties in Germany, including weak demand and heightened competition from abroad. Political instability stemming from a budget dispute has further complicated the economic landscape, with a quick election scheduled for February 2025. These developments raise concerns about future growth and stability in Germany's economy, the largest in Europe. The potential consequences could lead to job losses and decreased consumer trust, impacting both businesses and the government. Understanding these factors is essential for anticipating the economic direction in Germany.
New gas price shock hits Europe amid energy crisis. European industries are bracing for a new gas price shock as colder weather reduces gas supplies and competition for liquefied natural gas, or LNG, intensifies. Right now, gas costs about €50 for every megawatt hour, and predictions suggest it could rise to €70 per megawatt hour next year. This comes after the energy crisis we saw in 2022, when prices peaked at around €350 per megawatt hour, which is roughly $370.60. The impact has been significant, with many factories across Europe shutting down, resulting in nearly 1 million job losses. The European Union is facing electricity prices that are 2 to 3 times higher than those in the United States. Currently, EU gas inventories are 85% full, down 10 percentage points from last year. In response, the European Commission has raised its goals for how much gas to store to ensure a steady supply. However, high energy costs are still putting pressure on European industries. This ongoing energy crisis highlights the reliance on Russian gas and underscores the urgent need for alternative energy sources. Analysts warn that the situation could lead to further deindustrialization in Europe, affecting both consumers and businesses alike.
South Korea declares martial law amid currency crisis. On December 5, 2024, South Korean President Yoon Suk-yeol declared martial law in response to significant chaos in the political and economic landscape. This announcement led to a crisis meeting with Finance Minister Choi Sang-mok and key financial authorities in Seoul, the capital of South Korea. The Bank of Korea, the nation's central bank, announced measures to stabilize the South Korean won, which has dropped to levels not seen since the global financial crisis of 2009. The government promised to provide unlimited cash to the markets to prevent a rapid selling of the won, currently valued at about $7.44 for 10,000 Korean won. This situation has raised ongoing concerns in South Korea, including rising prices and public demonstrations. The effects of martial law may lead to greater government control over economic activities, impacting both citizens and businesses. Understanding this context is essential for grasping the potential long-term effects on South Korea's economy.
Russia and Belarus sign security treaty. Russia and Belarus have signed a treaty that guarantees mutual security during a summit in Minsk, the capital of Belarus. This event celebrates the 25th anniversary of the Union State, a political and economic alliance between the two nations. Kremlin spokesman Dmitry Peskov emphasized that this initiative is reciprocal, aiming to strengthen military ties as tensions rise with Western countries. Recently, Russian President Vladimir Putin announced the deployment of tactical nuclear missiles in Belarus, which has raised alarms in the West. Belarusian President Alexander Lukashenko stated that any use of these nuclear weapons would need his personal approval. This treaty marks a significant increase in military cooperation, potentially leading to more military drills and a stronger Russian presence in Eastern Europe. As a result, this situation may further strain relations with NATO and lead to increased security actions in the region.
French debt risk premiums decline amid political changes. French debt risk premiums have dropped after President Emmanuel Macron announced plans to appoint a new prime minister. The difference between French and German bond yields has fallen to 73.50 basis points, its lowest level since November 21. This decline shows improved market confidence following Macron's promise to tackle the 2025 budget. Michel Barnier, the recently ousted prime minister, faced criticism for his budget strategies, which led to his resignation after just 3 months in office. Marine Le Pen, leader of the far-right National Rally Party, suggested that a budget could be approved soon, hinting at a possible resolution to the ongoing political stalemate. Meanwhile, discussions are ongoing within the European Union about a proposed joint fund of €500 billion, roughly $530 billion, aimed at supporting defense projects. This fund is intended to help member states and ease financial pressures. The narrowing of yield spreads indicates a more positive outlook for French debt, which could lower borrowing costs for the government. Investors and governments should keep a close eye on these developments, as they may significantly affect economic stability in France and the wider European Union.
Norway's wealth fund takes steps to sell Russian stocks. Norway's sovereign wealth fund, valued at $1.8 trillion, is now allowed to sell stocks in Russian companies, as long as these transactions follow international sanctions. This decision comes after a freeze on transactions that was put in place following Russia's invasion of Ukraine in February 2022. The fund holds about 1.5% of all global shares and had a Russian equity portfolio worth around 1.5 billion Norwegian kroner, roughly $135 million United States dollars, as of June 2023. Additionally, it has 3.2 billion Norwegian kroner, about 291 million United States dollars, in Russian rubles in a Citibank account. The Norwegian Ministry of Finance has stressed that any sales must comply with the relevant sanctions. This situation raises important questions about the future of foreign investments in Russia and how it might affect global markets, as companies may need to rethink their exposure to Russian assets amid ongoing international conflicts.
Amendment to Canada's Cybersecurity Bill C-26. The Canadian Senate has made changes to Bill C-26, an important cybersecurity law, to correct a mistake that could have impacted key parts of the bill. Introduced in 2022, this law aims to enhance cybersecurity rules for federally regulated industries and limit partnerships with high-risk vendors like Huawei, a telecommunications company facing security concerns. The Senate's amendment took place on a Thursday, extending the legislative process that has already lasted over 2 years. The revised bill will now return to the House of Commons for further approval. Strong cybersecurity measures are crucial for protecting national security and infrastructure, affecting citizens and businesses throughout Canada. Ongoing discussions about this bill emphasize the need for solid cybersecurity systems in our increasingly digital world.
Impact of China's trade restrictions on Western supply chains. China's recent trade restrictions on essential minerals like antimony, gallium, and germanium are having a significant impact on Western companies. Henkel, a major German chemicals and consumer goods firm, reported a revenue of €10.79 billion, which is about $11.4 billion United States dollars last year. The price of antimony has increased nearly 230% this year, reaching around $39,000 per metric ton in Rotterdam, the Netherlands. These trade restrictions have forced Henkel to stop deliveries of certain products used in the automotive industry due to unexpected circumstances. This situation highlights the weaknesses in Western supply chains that heavily rely on Chinese minerals. Companies are now seeking substitute sources to reduce risks. The effects of these trade restrictions may lead to higher prices for consumers and a stronger push for sustainable sourcing practices. Understanding these developments is crucial for grasping the ongoing shifts in global trade dynamics.
Global equity funds see strong inflows amid economic optimism. Global equity funds experienced a substantial influx of $21.8 billion during the week ending December 4, 2024. U.S. equity funds led the pack with $8.85 billion, followed by European equity funds with $5.92 billion and Asian equity funds bringing in $4.58 billion. Key sectors like finance and industry saw incoming funds of $813 million and $573 million, respectively. Despite political challenges in France and South Korea, strong growth expectations in the United States have boosted investor excitement. The European Central Bank is expected to make further interest rate cuts, which could benefit European stocks. Investors should keep an eye on these trends, as they indicate a positive outlook for U.S. markets, while European and Asian markets may face some difficulties. Currently, the euro is valued at about 1.07 USD. This means that 5.92 billion euros converts to roughly 6.34 billion United States dollars, and 4.58 billion euros is around 4.91 billion United States dollars. Understanding these factors is essential for making informed investment decisions.
Swati Dhingra calls for interest rate cuts. Swati Dhingra, a member of the Bank of England's Monetary Policy Committee, is pushing for lower interest rates. She argues that current strict policies are negatively impacting quality of life and corporate spending. Dhingra warns that weak spending and investment could harm long-term economic efficiency. The next meeting of the Bank of England is scheduled for December 19, 2024, where interest rates will be discussed. Dhingra's support for rate cuts began in February 2024, indicating a shift in her perspective. Recent discussions have raised concerns about potential U.S. tariffs under President-elect Donald Trump, which could affect trade relations between the UK and the US. Lowering interest rates could encourage consumer spending and business investment, providing a much-needed boost to the economy. Current conditions in the UK suggest that careful management of monetary policy is crucial to tackle issues related to inflation and growth.
Adani smelter expansion enhances India's copper independence. India's Federal Ministry of Mines has announced an expansion of Adani's copper smelter located in Mundra, Gujarat. This project aims to eliminate the need for importing refined copper. The new facility, costing $1.2 billion, will initially produce 500,000 metric tons of copper, with plans to increase that capacity to 1 million metric tons by 2028-29. In the fiscal year ending in March 2024, India imported 363,000 tons of refined copper, mainly from Japan. Domestic usage exceeds 750,000 tons, which means the country needs to import about 500,000 tons each year. This expansion supports India's goal of being self-sufficient in critical minerals, especially as demand grows in construction and green energy sectors. This development comes amid ongoing allegations against Gautam Adani, the chairman of Adani Group, related to a $265 million bribery scheme. Increasing domestic production could help stabilize copper prices and lessen reliance on imports, which would impact the global copper market. Overall, this reflects India's strategic push toward clean energy and infrastructure growth.
Mexico's budget cuts and deportation concerns. Mexico is facing significant budget cuts that could affect its ability to handle potential mass deportations promised by U.S. President-elect Donald Trump. The proposed budget for 2025 includes a 10% reduction for the National Institute of Migration, or INM, and the Mexican Commission for Refugee Assistance, known as COMAR, leading to an allocation of about $85 million. This reduction comes as Mexico grapples with a budget deficit of nearly 6%, the highest level in over 40 years. In recent years, around 200,000 Mexicans have been deported each year from the United States, where about 5.5 million of the estimated 11 million undocumented immigrants are Mexican. These budget cuts raise concerns about whether Mexican agencies are ready to manage an increased flow of deportees. Additionally, the Ministry of Foreign Affairs is also expected to face an 8% budget cut. These developments could put pressure on Mexico's social services and economy, especially in border areas, and may impact U.S.-Mexico relations. The budget cuts and the anticipated rise in deportations highlight the urgent need for thorough planning to support deportees and effectively manage migration.
U.S. judge rules on race-conscious admissions at Naval Academy. A federal judge in Baltimore, Maryland, has ruled that the U.S. Naval Academy can continue to consider race in its admissions process. This decision comes despite a recent U.S. Supreme Court ruling that prohibited similar policies at civilian colleges. U.S. District Judge Richard Bennett emphasized that diversity is important for national security, stating that a diverse officer corps is essential for both the Navy and Marine Corps. This ruling follows a challenge from Students for Fair Admissions, led by Edward Bloom, who argued that the Academy's policies are not lawful. The Supreme Court's June 2023 decision, which resulted in a 6-3 split against affirmative action in civilian institutions, set the stage for this legal battle. This ruling could influence how military academies approach admissions in the future and contribute to the ongoing national discussion about race and equality in education.
Mexico's trade talks with the U.S. and Canada. On December 6, 2024, in Mexico City, Deputy Economy Minister Luis Rosendo Gutierrez confirmed Mexico's commitment to protecting its trade agreement with the United States and Canada. This comes after U.S. President-elect Donald Trump suggested potential tariffs if Mexico fails to address security and migration issues. Gutierrez noted that Mexican officials are actively working to resolve these concerns. The United States-Mexico-Canada Agreement, or USMCA, is crucial for Mexico's economy, which relies heavily on trade with its northern neighbors. Gutierrez also mentioned that Mexico plans to introduce an investment screening process similar to the U.S. Committee on Foreign Investment. This initiative aims to create a favorable environment for foreign companies, including the Chinese automaker BYD, which intends to build a factory in Mexico. The results of these negotiations could significantly impact Mexico's economic stability and its ability to attract foreign investments. Understanding these developments is essential, as they may influence consumer prices and the overall economic landscape in North America.
Norway's sovereign wealth fund reaches new heights. Norway's sovereign wealth fund, the largest in the world, has hit an incredible value of 20 trillion Norwegian krone, which is about 1.80 trillion United States dollars. This achievement means the fund has doubled in just 5 years, driven by significant income from oil and gas and rising stock markets. It owns roughly 1.5% of all stocks worldwide and is nearly 4 times larger than Norway's annual gross domestic product. With a population of 5.6 million, that works out to around 321,000 United States dollars for every person in Norway. The fund's biggest investments include U.S. government bonds worth 136 billion United States dollars and shares in major companies like Microsoft, Apple, and Nvidia. Its growth has been fueled by global economic support during the COVID-19 pandemic and rising natural gas prices due to political conflicts, especially following Russia's invasion of Ukraine. This growth not only strengthens Norway's economy but could also influence global markets, as the fund's investments can affect stock prices and corporate performance.
Chevron's role in Venezuela amid U.S. sanctions. Chevron stands out as the only U.S. oil producer currently operating in Venezuela. The company has not had discussions with President-elect Donald Trump about its activities there. CEO Michael Wirth has stated that Chevron aims to align with U.S. policy while working towards a brighter future for the Venezuelan people. Back in 2019, the first Trump administration imposed significant sanctions on the Venezuelan state oil company, Petróleos de Venezuela, to restrict oil exports. However, since 2022, Chevron has been allowed to export oil to recover unpaid dividends from its joint ventures. Just last month, Chevron shipped 238,000 barrels of oil per day to the United States under a 2022 authorization from the Biden administration. These eased restrictions have enabled Chevron to continue its operations in Venezuela, despite ongoing international conflicts. The situation remains uncertain, as the incoming Trump administration may change U.S. policies toward Venezuela. Understanding these developments is crucial, as they influence global oil prices and the economic health of Venezuela, a country in South America rich in oil reserves.
Elon Musk's support for Trump's campaign. Elon Musk has donated over $259 million to support Donald Trump's 2024 presidential campaign, making him one of the biggest financial backers in U.S. election history. This total includes $239 million given to the America Political Action Committee, which Musk founded, and an additional $20 million to RBG PAC, aimed at swaying voters on Trump's views about abortion. These donations highlight Musk's significant impact on the political landscape and his close ties to Trump. As the CEO of Tesla and SpaceX, Musk's involvement raises important questions about the overlap between business and politics. Political action committees can raise and spend unlimited amounts of money, often giving their donors more influence. Musk's donations may change how the public perceives his companies and the rules that govern them. Understanding the effects of these financial contributions is crucial as they shape political goals and influence elections.
Trump forms new crypto policy team. President-elect Donald Trump has announced the formation of a new crypto policy team. He has appointed David Sachs as the White House AI and crypto czar, and Paul Atkins as the head of the Securities and Exchange Commission, known as the SEC. This team aims to reshape the regulatory environment for cryptocurrencies, which have faced significant scrutiny under the previous administration. The announcement comes as Bitcoin, the largest cryptocurrency, has risen sharply past $100,000, reflecting growing optimism about potential regulatory changes. Sachs, a former PayPal executive and early Bitcoin investor, is expected to drive advancements in the crypto sector. Meanwhile, Atkins, a respected figure in Washington, has a history of supporting financial innovation. The SEC has previously taken legal action against many crypto companies for alleged violations of securities laws. A more welcoming regulatory environment could lead to better investment opportunities and clearer guidelines for crypto businesses. These changes may strengthen the United States' position in the global cryptocurrency market, benefiting both investors and companies in the sector.
Impact of immigration policy on Canada's economy. A new report from the Conference Board of Canada reveals that the federal government's plan to cut immigration targets will slow economic growth. The report forecasts a decline of $7.9 billion in 2025 and $16.2 billion in 2026 due to these changes. The government intends to reduce the number of temporary residents by over 900,000 in the next 2 years. This sudden policy shift could pressure employers and worsen labor shortages across various sectors. Pedro Antunes, the chief economist at the Conference Board of Canada, warns that these immigration changes may hinder the fragile economic recovery. It's crucial to understand the effects of these changes, as they could lead to higher costs for businesses and a slower recovery for the economy. This situation highlights the delicate balance between managing immigration and fostering economic growth.
Google takes on CFPB over payment rules. Google is taking action against the U.S. Consumer Financial Protection Bureau, or CFPB, after the agency decided to impose federal rules on Google Pay, its digital payment service. The case, filed on December 6, 2024, claims that the CFPB's actions are an overreach, especially since Google Pay's peer-to-peer payment feature is no longer available in the U.S. This legal battle highlights the ongoing conflict between tech companies and regulators over how digital financial services should be managed. The outcome could have a big impact on how tech companies are governed in the future, affecting user privacy, security, and innovation in the digital payments industry.
Palantir and Anduril's partnership in AI for defense. Palantir Technologies, a data analytics firm, has joined forces with Anduril Industries, a defense technology company, to enhance AI training using defense information. This partnership, announced on December 6, 2024, aims to improve the application of AI models in national security, addressing issues related to sensitive data. Founded in 2017, Anduril specializes in autonomous defense solutions, while Palantir is known for its software that integrates and analyzes data. This collaboration is part of an exciting trend in the defense sector towards automation and advanced technology. The effects could lead to more effective military operations and increased funding for AI technologies, impacting government spending and military preparedness. As AI continues to evolve, its role in national security is expected to expand, providing new capabilities for defense operations.
Trump's inauguration and TikTok's future. President-elect Donald Trump is set to take office for a second term on January 20, 2025, after defeating Vice President Kamala Harris in the 2024 election. A potential ban on the social media service TikTok could be enacted just a day before the inauguration. TikTok argues that this ban would silence the voices of over 170 million users in the US and around the world. Recently, the U.S. Court of Appeals upheld a law requiring TikTok to cut ties with its China-based parent company, ByteDance, or face a ban by mid-January. This law, signed by President Joe Biden in April 2024, reflects ongoing concerns about national security, data privacy, and foreign influence. The impact of a TikTok ban could significantly affect users, creators, and businesses that rely on the platform for marketing and engagement. This situation highlights the growing tension between the US and China, especially in the technology sector. That is all the news for today. Thank you for listening to today's Headphone News. News summary brought to you by AI.